Good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Remember, anything said in this piece is an opinion only. Just do my shirt up properly. Okay, we're about to enter a massive banking crisis. There's a banking crisis here looming. First Republic, which is a second-tier bank in the US, was significantly impacted by the most recent banking crisis caused by Silicon Valley Bank going bust and Signature Bank going bust in the US. Following on from that, if you recall, Credit Suisse, Tier 1 bank, went bust, bought out by UBS. UBS showed a massive drop in profits yesterday and also won't be in trouble but is impacted by the banking crisis. Okay, so we've got a massive crisis looming. There's been a run on the deposits as far as First Republic is concerned. The deposits have dropped. They reported yesterday the deposits have dropped by 40%, from 140 billion down to 102 billion dollars. Effectively, that is a run on the bank. Okay, we're not talking about now this bank surviving. We're talking now when, not if, when this bank is going to go bust or being taken over or have a massive bailout by the US Treasury to the tune of hundreds of billions in order to save it and add confidence to the banking sector. First Republic is within weeks of going bust, not because they haven't got any money. It's because their structure and their strategy and the way the bank is set up now is just playing into the crisis mode. Remember, the top tier banks, 11 top tier banks, pumped in $30 billion back in February into First Republic in order to save it and also to save the banking sector in terms of confidence. But it's not been enough. First Republic yesterday said they're going to have to restructure everything, lay off 25% of their staff, and that all is leading into and indicating that this bank is over. It's just gone. First Republic's gone, and the public is not going to have confidence in First Republic. Where's that going to lead to the other banks as far as the banking crisis is concerned? Well, what starts off at the second tier does not remain in the second tier. It leads on to the first tier. So Northern Trust yesterday, which is a second tier bank that also has huge drop in deposits. That's probably the next second tier bank to go bust in the States. So all the second tier banks in the US are effectively going to be under the spotlight, under the magnifying glass, to see which one is likely to have cash flow credit crisis. All of them are going into a credit crisis, which will lead on to the first tier banks. Now, the first tier banks and the second tier banks have stopped lending money to businesses. There's many builders in the US and many car loan companies that are simply not getting the funding they need, and many of them are not only laying off staff, they're closing down the forecourts, because remember, car loans have jumped from either 0% to 4%, or subsequently now they're running at 7, 8, 9%. People taking out new cars are going to have to pay high money in maintenance of that particular loan they're going to take out from the bank. Take that into account. That is the starting point. Furthermore, there's been the default rate on car loans has significantly risen over the last 12 months. It's gone up by more than 50%. The next part of default is going to be mortgages, whether it's residential or commercial. That is going to impact the second tier banks, and of course it's going to impact the first tier banks. And all the banks are now going to be locking down their safes and being more stringent in their requirements for a loan to be authorized and a loan to be issued, because once that loan's issued, they don't have $500,000 or $10 million spare. What they do is they get that money and they loan it on the credit. They effectively print the money. It could be so. They create $1 million, create $10 million of debt to the bank, and they lend that debt out. And that is going to cause major problems, because the banks now see that the economy is turning and we're going to go into recession over the next 12 to 18 months, and it's going to be significant. Now, the banking sector is one of the major foundations of the economy. Whenever you look at sectors, you're going to look at the banking sector, because how safe is your money? Your money is as safe as houses or as safe as the safe deposit at the bank. But that now is becoming under the spotlight and is becoming questioned. Are these banks stable enough to hold your money? Interestingly enough, yesterday, as a result of the banking crisis, Bitcoin jumped from negative to positive. In other words, there's many people out there, I'm not one of them, that believe that Bitcoin is going to be a safe haven for this particular banking crisis. Again, anything said in this piece is an opinion. In my opinion, Bitcoin is not going to be the safe haven for a banking crisis. Gold's going to be a safe haven, not the US dollar and US treasuries. However, once the US starts printing money, and they will be printing money, you're going to have inflation going through the roof, and the value of your money in that bank account is going to be devalued significantly. Taking into account that they claim the official inflation rate's running at 5.1, but in the UK 10.1%. The unofficial rate is running well into the teens, 17, 18, 19%. Unofficial inflation, that's what you're feeling in your pocket. So the banking crisis is going to cause a more contraction, liquidity crisis. It's going to cause more contraction in the economy. There's going to be more layoffs. There's going to be more companies that are not meeting their earnings, and they're going to cause the economy to go into a recession as a result. So the banking crisis is going to lead into recession. This is Meir Walensky with Driving Markets. You can subscribe, you can share, you can comment. I've also got TikTok, and I've got Instagram. Have a good day.